Welcome to Business with Louis, the show where we dive into the world of entrepreneurship and explore the concepts that drive business success. Today, we're talking about return on investment, or ROI, a fundamental concept that helps you make informed decisions about where to allocate your resources. So, what is return on investment? Simply put, it's a measure of how much return or profit you generate from an investment compared to its cost. Think of it like this. Imagine you invest $100 in a marketing campaign, and it generates $150 in revenue. Your ROI would be 50% because you earned $50 more than you spent. But if that same campaign only generated $80 in revenue, your ROI would be 20% because you lost $20. Understanding ROI is crucial in business because it helps you evaluate the effectiveness of your investments and make data-driven decisions about where to allocate your resources. It's not just about throwing money at a problem or opportunity. It's about making smart choices that drive growth and profitability. One key concept is the idea of opportunity cost, the idea that every investment you make has an alternative use. For example, if you invest in a new product line, you might be giving up the opportunity to invest in marketing or hiring more staff. Influential thinkers like economist Michael Porter have emphasized the importance of considering opportunity costs when making investment decisions. Another important concept is the time value of money, the idea that $1 today is worth more than $1 tomorrow. This is because you can invest that dollar today and earn returns on it, whereas if you wait until tomorrow, you'll miss out on those potential returns. This concept is critical in ROI calculations, as it helps you account for the fact that investments made today may not generate returns until sometime in the future. Take the company Airbnb, for instance. When they first started out, they invested heavily in marketing and user acquisition, with a focus on generating high-quality listings and building a strong brand. Their ROI on those investments was likely very high, as they were able to attract millions of users and drive rapid growth. On the other hand, consider the example of Kodak, the photography company that failed to adapt to the shift to digital cameras. They invested heavily in film technology, even as the market was shifting towards digital. Their ROI on those investments was likely very low, as they were unable to generate enough returns to offset the decline of their traditional business. So, how can you apply return on investment to your own ventures or careers? First, it's essential to set clear goals for what you want to achieve. Whether it's launching a new product, expanding into a new market, or simply growing your customer base, having a defined objective helps you measure success and calculate ROI. Next, consider the resources you'll need: money, time, talent, and evaluate how they might generate returns. For example, if you're thinking of investing in social media advertising, use metrics like cost per acquisition or return on ad spend to track your progress. One challenge many entrepreneurs face is accurately measuring ROI, especially in areas like marketing or employee training, where the outcomes can be less tangible. Here, it's crucial to use data and analytics tools that can help track the impact of your investments over time. For instance, if you're investing in content marketing, use metrics like engagement rates or lead generation to evaluate its effectiveness. Another key strategy for success is to experiment and be willing to take calculated risks. Sometimes the best investments are those that don't work out as planned because they teach valuable lessons and provide insights that can inform future decisions. As the entrepreneur and investor Peter Thiel once said, the biggest successes often require the ability to think differently and take bold action. In addition to these strategies, there are many tools and resources available that can help you calculate and optimize ROI. For example, spreadsheet software like Excel or Google Sheets can be used to create detailed ROI models and track investment performance over time. There are also many online courses and tutorials available that provide guidance on ROI calculation and analysis. Finally, it's worth noting that return on investment is not just about financial returns. It's also about social and environmental impact. As consumers become increasingly conscious of the impact of their purchasing decisions, businesses that prioritize sustainability and social responsibility are likely to see higher ROIs in the long run. In conclusion, understanding return on investment is key to making informed decisions and driving business success. By applying the principles of ROI, from calculating returns to evaluating opportunity cost, you can ensure that your investments are aligned with your goals and generate the highest possible return. Whether you're an entrepreneur, investor, or business leader, ROI is a fundamental concept that should be at the heart of every decision you make. That's it for today's Business with Louis. Be sure to like, share, and subscribe. And remember, every great business starts with action. Make your next move count, and don't forget to calculate your ROI along the way.